happy morning, happy afternoon, and happy evening to all my Nanbas and Nanbis. Items of FS. This usually comes for 10 marks in every attempt, and I'm sure you know that, but still you would have chosen to skip this chapter because it is voluminous. This is not hard. I will not trust if anyone says this is hard. Let me tell you why. Items of FS is like a chapter which is basically like if you have done any audit in your life, this is the easiest chapter because there is practical experience. Now, if I'm going to teach you swimming from here through that computer, will you be able to learn the swimming? There is no chance. But once you practice and once you know the skill, it is going to be a cakewalk. You can never forget it. The same way, guys, the same way for items of FS. Also, if you can actually imagine that you are doing the audit, then this chapter becomes extremely easy. And this is the chance. You have this extended time period. This is the chance for you to utilize, and at least minimum you can do the workout. And if you want to do the conceptual revision also, the classes are absolutely free now for both audit and SM. In the website you just have to scroll down, and at the end this is given here, audit and SM free lectures. You can definitely purchase this. The concepts revision and the workout both are given for all the chapters. You can make use of that. Yes, and right now let's get into the workout of items of FS. Starting off with a workout of audit of items of FS. Now quickly going through all the questions which is given here. Question number 1. Prudent Enterprises Private Limited has incurred and fully spent for the first time CSR expenditure amounting to 14.5 lakhs in pursuance of to provisions of section 135 of the Companies Act. The expenditure was spent for women empowerment programs through an implementing agency which is not a related party. As per law provisions, it was required to spend 14 lakhs during the year. Discuss how such information is required to be disclosed in accordance with requirements of Schedule 3 to the Companies Act 2013 in financial statements of the company. Now they are asking you about the disclosure requirements of CSR. Now in the answer, if you see, we already know the disclosure requirements. What is the amount which is required to be spent? What is the amount which is spent? What is the shortfall? What is the total of previous year's shortfall? What is the reason for the shortfall? First of all, is there a shortfall? Now as soon as you look at this question, you will feel that 50 lakhs is shortfall, but listen to what they are saying very clearly. Here, fully spent amounting to 14.5, and they are required to spend only 14 lakhs. So there is no shortfall here. In fact, they have spent extra 0.5 lakhs for CSR activity. But because they are asking you for the Schedule 3 disclosure, you will have to write all the points. Now, where is this given in the items of FS, ma'am? Is this a balance sheet item? Is this a profit and loss item? Where can I see this in the study material? Now, this is something which I always tell in the class. After you finish all the balance sheet items, after you finish all the P&L items, do not think items of FS is over. Apart from that, they have given additional information, additional important disclosures. There are 5 points which is given. In that, one of them is CSR activity. So if you have studied that, this will be extremely easy for you because this is a direct question basically. Now just going through the answer. Amount required to be spent is 14. Amount of expenditure incurred is 14.5. Shortfall at the end of the year nil. Total of previous year shortfall not applicable. Reason for shortfall not applicable. Nature of CSR activity. Here they have given women empowerment activities through the implementing agency. All those things, nature they have given. Details of related party transactions. Clearly they have told it is not a related party. So it is nil. Where a provision is made for liability incurred with respect to contractual obligation, this is not applicable for the company. Going to the second question. You are part of engagement team conducting audit of an entity engaged in manufacturing business. Alright. State few audit procedures you would undertake to perform to verify that recorded sales in the financial statements represent goods actually sold during the period and recorded sales are not overstated. They are asking about sales here.
Now what are they asking about sales? Whether whatever is recorded is what is actually sold only and it is not understated or overstated, they are asking. Now, following audit procedures can be performed to verify that recorded sales in the financial statement. So, all our sales point, P&L item, first one we studied sales. Check whether a single sales invoice is recorded twice or cancelled sales invoice has been recorded. Test check few invoices with relevant entries in the sales journal. Obtain confirmation from few customers. This is for genuineness of transactions and this is external confirmation. Check whether any fictitious customers are there. Once you check whether the few customers are genuine, you will already know whether they are fictitious or not. Verify whether any shipment were done without the consent and agreement of the customer, whether unearned revenue is recorded as earned, whether any substantial uncertainty exists about collectability, because sale means you're giving the good and you have to collect the money back, whether any uncertainty is there with respect to the collectability of the money, whether customer obligations are contingent on other financing, resale, etc. Review sequence of the sales invoices, because usually sales invoices will be 1 2 3 like that, it will keep going. In the between, if you see that 16 is not there, then you know that 16th invoice is either cancelled or some problem is there, you will know. So you will see the sequence of the sales invoice. Review journal entry for unusual transaction, calculate the ratio of sales return to sales and compare it with the previous year. Question number 3. This is also direct question, direct answer guys. WTE Private Limited is engaged in business of manufacturing a product which is liable to GST at 5%. The input raw material for manufacturing is liable to GST at 12 and 18%. Now here he is going to get a input tax credit. As a result, ITC on inputs amounting to 60 lakhs is accumulated in the electronic credit ledger and refundable to company under provisions of GST law. How will this 60 lakhs be reflected and classified in the balance sheet of the company? State few audit procedures for the same. Where will this come? First of all, input tax credit means it has to come inside the company. That means it is automatically asset which will come under other current assets, guys. Now, first you have to write that. It is refundable by virtue of provisions. The above balance will be reflected and classified under current assets. Within current assets, it will be classified under other current assets. Under this, what are the items that you have to see? I already told in my class also when we were discussing, there was a question which was asked here in either of the mock test or somewhere, and these are the 4 points that you will be writing. In relation to balances with statutory authority like GST input credit, prepare a reasonability analysis with respect to purchases. Obtain copies of statutory GST returns filed. In case of refundable amount as on balance sheet date is still outstanding, verify whether amount recorded as per books tallies with claim made in the GST portal. In case refundable amount as on balance sheet is received at a later date, you can see the bank statement and verify whether they have actually received the cash or not. Now, in an initial audit engagement, in the case of inventories, okay, the current period's audit procedures on the closing inventory balance provide little audit evidence regarding inventory in hand at the beginning of the period. Therefore, in such a case, additional audit procedures become necessary so that auditor may obtain sufficient and appropriate audit evidence. Discuss those additional audit procedures. Now, first of all, inventory is there in multiple places. Yes, is there in Caro, it's there in SA 501 in multiple places, and also items of FS under asset side, it is there inventories. You need to know if they are asking to discuss the audit procedures. So automatically you will be coming to the items of FS. Now here, what and all will you see? This is with regard to the opening balance of the inventory. Yes, inventory on hand at the beginning of the period. In an initial audit engagement, in the case of inventory, current period's audit procedures on the closing inventory balance provide little audit evidence regarding inventory on hand at the beginning of the period. Therefore, additional audit procedures may be necessary, and therefore one or more of the following may provide sufficient appropriate audit evidence. Still here he is talking about the facts which is already given. Now what is the audit procedure? Observing the current physical inventory count and reconciling with the opening inventory quantity. Performing audit procedures on the valuation of the opening inventory items. Performing audit procedures on gross profit and also the cut-off procedures. These 3 points, if you write this, maybe they asked for 3 marks or 4 marks, I'm not sure, but full marks you will be getting with just these 3 points, guys. Now, TISA Industries Private Limited has prepared its financial statements for the year 23-24. Following statements and notes to account show the following information and disclosure in respect of trade receivables of the company. What are they saying? Trade receivable amount in lakhs is 240 lakhs. They have also given the aging schedule: less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years, MSME, others, disputed due MSME, disputed due others. All of those things have been given. Now, what is the problem? They are asking. First of all, here if you see, they are starting from less than 1 year. Is that correct? They should start from less than 6 months period. So that is the first mistake. Now, MSME and other trade receivables, is that required? That distinction here, all this is not required. Unnecessarily they have given, but let's first read the answer which is given here. The above disclosure is not in accordance with requirements of Division 1 of Schedule 3. The discrepancies are as under. How will you know that it is not in requirements of Division 1 of Schedule 3? You should first know what is Schedule 3 disclosure required for trade receivables. It is given in accounting accounts also, and it is given here also. When we study trade receivables also, disclosure, we studied what and all is there. Company has disclosed wrong information for trade receivables in a manner which is applicable for trade payables. No distinction between MSME and other trade receivables is required. Trade receivables are categorized into undisputed and disputed trade receivables. Undisputed trade receivables considered good, undisputed trade receivables considered doubtful, disputed trade receivables considered good, disputed considered doubtful. These 4 are first. Next is aging. I told you here they started from less than 1 year. They are ideally to start from less than 6 months. Less than 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. This information is also required as a subclassification. Secured considered good, unsecured considered good, doubtful. Unsecured considered good, doubtful. Sorry, again it is written, allowance for bad and doubtful debts shall be disclosed under the relevant heads separately. Debt due by director or other officer of the company, or debt due by any firm in which the director is a partner or director is a member, should be separately stated. This is the disclosure requirement for trade receivables, guys. Going to question number 6. Being statutory auditor of JAL Limited, a company engaged in manufacturing of chemicals, CA Gopika has understood that company is expected to have material work in progress as on 31st March 2024. State few audit procedures to verify existence and valuation assertions for work in progress. If you remember, we specifically saw raw material, work in progress, finished goods. Now here what are they asking? Only for work in progress they are asking. Audit procedures to verify existence and valuation assertions for work in progress are: first, existence means physical verification of inventory. Compulsory point you have to write. Attend the inventory count in accordance with SA 501. Yes, inventory means 501 reference you can give, and understand how the work in progress is arrived at. Evaluate work of the expert. We saw for work in progress, you might not have the relevant knowledge to evaluate the inventory because it is in the process, it is in the machine. So you might need an expert to do the job, expert to value the inventory. Ascertain how the various stages of production or value addition are measured, and in case estimates are made, understand the basis for such estimates. Just one small example. If you see chickpeas, chickpea, how does it make? They put the groundnuts, they put the jaggery, then they put some ghee or oil or something, they put a little bit of cardamom also, and they will be mixing something. When they are mixing something, you want to go and do the physical verification of inventory. How much peanuts are there? How much jaggery is there? How will you be able to test? And there will also be some kind of evaporation which is happening, so there will be an estimate which is done. So that only they are saying. What is the basis of such estimate also you should be seeing. Ascertain what are the elements of cost that is included. If overheads are included, ascertain the basis on which they are included and compare the basis. Ensure that material cost exclude any abnormal wastage factors. Few points which is also the common points for finished goods also. There also we saw abnormal, obsolete goods, they should not be considered for inventory valuation. Going to question number 7. It is important to carry out the test of controls for checking the effectiveness of internal control over sales as part of the debtors audit procedure. Direct question, direct answer, guys. We saw this. Where did we see? Sales means it goes to trade receivable. Trade receivable means what? You have made the sale and you are going to get the money at a later date. There, the first point in the mind mapping when we did, the first point was test of controls for checking the effectiveness of internal control. There, few points have been given. Direct question, direct answer. Only bona fide sales lead to trade receivables. They are made to approved customer. They are properly recorded in the books of accounts. Once recorded either by cash or by authority of responsible official, segregation of duties at every point in the sale transaction. Debtors are collected on time. If they are not collected on time, will the company leave simply? They will be sending the reminders. And after reminders also, will they leave simply? They will be getting into legal actions if it is required. Balances are regularly reviewed. Proper system of follow-up is also there. If necessary, bad debts also should be made. Next question. Question number 8. Alpha Limited has availed bank OD facility from a nationalized bank. The company received the balance confirmation certificate for bank overdraft balance as on 31st March 2024 from the bank. The particulars and amount is given. Bank overdraft balance as per bank certificate is 25,66,200, but as per ledger the overdraft balance is higher, 26,45,300. Now how will you vouch or verify the borrowings from bank taken by Alpha Limited? Directly they are asking about the borrowings from the bank. Vouching or verification of borrowings from the bank. Now he has to get independent balance confirmation in respect of borrowings. Again, SA 505, independent balance confirmation, external confirmation from bank and financial institution you can get. We already saw borrowings. Ascertain that confirmation asks for all information likely to be relevant to the test of debt and related interest balances. Send reminder for non-reply. Compare balances as per confirmation obtained in the books of accounts. Ask for reconciliation if there are differences and test the supporting document. Reconcile balance in the overdraft or loan account with that shown in the passbook and confirm last mentioned balance by obtaining the certificate. Obtain independent balance confirmation from bank showing the balances, particulars of securities deposited as security for the loan and charge created on asset, and confirm that same has been correctly disclosed. Verify the authority under which the loan or draft has been raised. In the case of a company, only BOD is authorized to raise a loan. Confirm in the case of a company that the restraint in section 180 of the Companies Act as regards to maximum amount of loan has not been contravened. Ascertain the purpose for which the loan has been raised. Normally, if there is a borrowing question, I always say you have to start with the point saying you have to talk about the agreement, because whenever there is a borrowing which is happening, there will be some loan agreement or debenture trust deed, something like that. But here the borrowing is with respect to an overdraft facility, and that is the reason why directly they have gone for independent confirmation, that is SA 505 external confirmation. Question number 9. This is again a question from the additional disclosure, guys. Schedule 3 of the Companies Act prescribes disclosure of certain ratios as part of additional regulatory information. Mention any 3 ratios that should be discussed along with the rules relating to disclosure of these ratios. There are multiple ratios, but what is the rule? That from the previous year in the current year, if there is a change more than 25%, then you have to give the explanation for the same. The reasons for the same must be given, the numerator and denominator explanation. Now all the ratios has been listed here. Current ratio, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, and return on investment. Rules relating to disclosure of ratios. This is the important part. Company shall explain the items included in the numerator and denominator for computing the above ratios. Further explanation will be provided for any change more than 25% as compared to the previous year. This is the point that you have to write. They are just asking 3 ratios. Whatever ratio you remember out of this whole 11 list, you can just write the 3. Going to question number 10. JB Limited has invested huge sums of money on establishment of new PP. Now this is for PPE during the year under audit. They have incurred an amount of 5,70,000 on dismantling of an old plant. I think the question is about whether the cost has to be included or excluded. We know what is the answer, which had become obsolete, so that a new plant can be set up at the existing location. The auditor is in the process of verifying the cost incurred towards PPE. What should be the accounting treatment of the amount spent on dismantling of old plant? Which elements of cost should be considered for valuing the PPE? All the cost along with the purchase price, including the import duties and non-refundable taxes, after reducing only the trade discount and not the cash discount and reducing the rebate, has to be included in the cost. Any cost directly attributable to bringing the asset to the location and condition necessary for it to be capable for the manner. Initial estimate for cost of dismantling, removing the item, restoring the stage and referring to decommissioning, restoration and similar liabilities, obligation for which enterprise incurs, for which item is acquired for a consequence, that also is a cost of PPE only. Now see the answer which is given here. In the given situation, JB Limited has invested huge sums of money which for establishment of new PP and incurred 570 on dismantling of old plant which has become obsolete. So the new plant, an item of PPE that qualifies for recognition, should be measured at its cost. The cost of dismantling, removing the item and restoring the site on which it is located, referred to as decommissioning, will form part of new PPE. This is the facts and this is the conclusion. But in this question they are also asking about the cost which should be considered for valuing the PP. So everything you will have to give. Now if they ask which is the cost not PP, 4 points are there. Or the inauguration cost is not PP, any introduction of a new product or service is not PP, any new business or new customer to obtain, that is not a PP, and any administrative or other general overhead is not PP. If they ask what is the directly attributable cost, then there are 6 points. Employee benefit as per AS 15, installation and assembly, cost of testing, that is sampling also will be PP only, professional fees, initial delivery and handling and site preparation. All these 6 points you should be able to write for all the directly attributable cost which will form part of PP. Apart from that, these 3 points, which is the cost, comprises of these 3 points, and that the third point is talking about estimate of the cost of dismantling, removing the item, decommissioning, that only they are talking here also. Now going to question number 11. You are the auditor of, is that okay guys? Till question 10, is it okay? Hardly 30 questions are there. We are already completed with 1/3. Question number 11, you are the auditor of Plus Bank Limited. The bank has made following provisions for the year ended on 31st March. Now we have to see provisions and contingencies. If you remember, we started off the mind mapping with what is provision, what is contingency. Then we went to the audit procedures and then we went to the disclosures. Here audit procedures, did they have any kind of assertions? No, directly they are giving. And about expert also it was there, just doing that mind mapping before we go inside. Now you are the auditor of Plus Bank Limited. Bank has the following provisions, okay? Provision for bad debts, provision for substandard assets, okay? Provision for expenses, provision for income tax. You are in the process of verifying the provisions and contingencies. What audit approach and procedures will you adopt to verify the above? They are just asking the audit approach. Now here you will have to write, ensure that compliances for various regulatory requirements for provision as contained in various circulars have been fulfilled. Obtain an understanding as to how the bank computes provision on standard assets and non-performing asset. It will primarily include checking the basis of classification of loans and receivables into standard, substandard, doubtful, loss and NPA. The auditor may verify the loan classification on a sampling basis. Now this point is from where? Audit of banks. There we saw what is the provisioning and all we saw. Obtain the detailed breakup of standard loan, non-performing loan and agree the outstanding balance with the general ledger. Obtain the tax provision computation from the bank's management, verify nature of items debited and credited to profit and loss account to ascertain that the same are appropriately considered. Examine the other provisions for expenses vis-a-vis circumstances warranting the provisioning and the adequacy of the same. These points you will have to write for each of the things. Basically, they have spoken about income tax, they've spoken about substandard, they've also spoken about bad debts here. Question number 12. Z Limited is engaged in the manufacturing and export of shoes. The statutory auditor of the company wants to reasonably ensure that only the inventories recorded in the financial statements are exclusively owned by the company and do not include any inventory that belong to third party, but include inventory owned by the company but lying with the third party. What is the advice the auditor on the audit procedures to be performed? Now you all just think for a second, what is the assertion that they are talking about? Yes, inventory you all definitely know, but what is the assertion that they are talking about? They're talking about inventory held by the entity. Inventory held by the third party must not be considered, and inventory lying with the third party and held by the company. They're talking about ownership, and they're talking about the completeness here. Now, under completeness, what are all the things that we saw? Analytical procedures, under that few ratios were given. Non-financial items also can be there, that is weights also can be taken. Example, in the class I have mentioned the jewelry example, yes or no? GRT, jewelry, that is the stock. So every single day they will have the thing. Non-financial information, weight, because amount of the jewelry cannot be written, so the grams of the jewelry will be written. Purchase or sale cutoff procedure, because inventory means from the purchases it is affecting, and from here only sales is getting affected, so the cutoff procedures for purchases and sales. Inventory means it has to be tagged, so tagged inventory you will be testing for all the omitted transactions, and you will be reconciling, especially if there are perpetual records for the inventory. You will be seeing the general ledger, and if the inventory is held by third party, you will be getting all the information from him, and if any inventory is held for consignment basis, that has to be segregated properly. Now let's quickly see the text which is given here. Perform analytical procedures. Comparison test with industry averages, budgets, prior year, trend analysis, etc. Compute inventory turnover ratio, vertical analysis, inventory or total asset, budget expectation vis-a-vis actuals. I told you few ratios under analytical procedures. Examine non-financial information related to inventory, such as weights also can be given. Perform purchase and sales cutoff procedure. Trace the shipping documents, that is the bill of lading and receiving report, warehouse report and inventory records. With respect to the tagged inventory, perform test for omitted transaction and test for invalid transactions. Verify the clerical and arithmetical accuracy. Reconcile physical inventory amount with perpetual records. Reconcile physical count with ledger control totals. Reconcile inventory which belong to client but are held with third parties like transporter, warehouse, port authority, etc. Goods received on consignment basis have to be kept separately. All the points I have covered like this. If they ask the question, actually this is a direct question if you ask me, because multiple times in the class I have told you, directly they are not going to say what is the audit procedure for this specific assertion called completeness. They are going to give like this only. With this you should be able to write all the completeness audit procedures. Now going to question number 13. While verifying cash and cash equivalent of a company, directly they are asking cash and cash equivalent. What are they asking? CAD, engagement partner, is very particular that bank reconciliation statement prepared by management in respect of bank account maintained is proper to rule out misstatements in cash and cash equivalent, which is reflected in the financial statements of the company. The company does not use net banking and prefers to issue checks to its creditors and receive substantial payment locally through account payee checks. They do not use net banking, they are using only checks here. Which aspects need to be taken care of and verified by CAD in respect of bank reconciliation statement? Now here, this is also a direct question actually. For bank reconciliation statement, what are the things that you will be seeing? You will be tallying the balance in the bank book with the bank statement. Then you will be seeing the checks issued but which is not presented for payment. At that time, what will happen? Once you issue the check, the entry which you will be passing is going to reduce the bank balance, but only when they present it, it is actually going to reduce the bank balance, so that reconciliation has to happen. So check issued but not presented, and bank statement for a subsequent period, verify if it is clear. And if the check becomes stale, greater than or equal to 3 months, if it is lapsed, then that time also you will have to see. Or sometimes what will happen, we will be depositing the check, but it is not credited by the bank. If we deposit the check, we are going to show as if our bank balance has increased, but only if the banker is crediting the check, only then it will actually increase our balance. So there can be a discrepancy. So that is why you will need bank reconciliation statement. If any check is not cleared beyond a certain time limit, then you need to go and ask for explanation for the same. And other points like material reconciling item and revenue recognition will be given here. Now this is under existence and completeness. Under that few points are there. Last point will be bank reconciliation statement. From there these points will flow through. Now verification of BRS shall entail the following: tallying the balance as per bank book to bank confirmation or statement, checking of all material reconciling items including under check issued but not presented for payment to the underlying bank book forming part of books of accounts. In addition, the auditor should request for bank statement or subsequent period and should verify if the check issued have subsequently been cleared. For all cases where checks have become stale, that is 3 months or more has lapsed, the same should not appear in the bank reconciliation statement. Checking of all material reconciling items including under checks deposited but not credited by bank by requesting for bank deposit slips duly acknowledged by the bank, because we are depositing but it is not yet credited by the bank. Checking of all material reconciling items including under amounts or charges debited or credited by the bank but not accounted for by requesting for bank statement. Yes, this point I did not tell, but in class I told when we revised all the concepts, that time sometimes there will be charges which is being taken by the bank themselves. They will not inform us anything. Only when we see the bank statement we will be able to see all the charges which is given. Now in the case like that, we have to understand as to why they are debiting the charges from our account. So we have to make the call to the bank and understand. Now those charges automatically will not be there in our bank statement. So our bank account is going to show a higher amount than actually what is there in the bank. At that time, when you do the bank reconciliation statement is when you will actually find out that there are charges which is given. So these 4 points are given for BRS. Question number 14. BOTS is a manufacturing entity having material PPE items in its financial statement. This is also directly they are saying that it is from PPE. The auditor of the entity wants to verify that PPE items have been valued appropriately as per generally accepted accounting policies and practices. What are they talking here? They are talking about the valuation, because here they are specifically mentioned whether it has been valued appropriately. Now PPE valuation means from where will you start? Just think of the points which you will tell. The first one, valuation means PPE means depreciation should be your first point. So depreciation should be done for all the items, and for non-depreciable items like freehold land, then depreciation should not be there. Now what is this depreciation? This should basically reflect the future economic benefits from that asset. And there is also one more point with respect to the impairment of the asset, which is as per AS 28 has to be given. Now these 3 points, just see, the trick is actually to understand what he is asking in the question. In the question, if you are able to see, okay, PPE, definitely you will know. Under PPE, only 4 assertions are covered: existence, valuation, completeness, and rights. They are definitely not talking about rights. They are talking about whether it is valued appropriately. So automatically you have to go to valuation, guys. Audit procedures that the auditor should follow to verify that the PPE items have been valued appropriately as per GAAP are: verify that entity has had depreciation on all items unless any item of PPE is non-depreciable like freehold land. Assess the depreciation method used reflects the pattern in which assets' future economic benefits are expected to be consumed. The method can be SLM, WDV, or unit of production method, or anything else as applicable, but it just has to show the future economic benefits. The auditor should also verify whether management has done an impairment assessment to determine whether item of PP is as per AS 28. Easy question actually. Question number 15. CAJ has been appointed as statutory auditor of Sigma and Beta Limited for the financial year 23-24. During the audit, he observed trade receivable amounting to 50 crores. Direct question, they are talking about trade receivables here. Amounting to 50 crores are reflected in the financial statement. He wants to obtain sufficient appropriate evidence to conclude that trade receivables have been valued appropriately. Suggest few procedures in this regard. Now you all tell me trade receivables. Now quickly do the mind mapping. The first one of trade receivables we saw testing of controls for the effectiveness of internal control over sales. That is the first part. The second part we went to audit procedures and then to disclosures. Under audit procedures, how many assertions did we cover? Now we are in trade receivables, so there are only three assertions which we cover. The first one is existence, completeness and valuation. Here specifically what have they asked? About valuation only they have asked. So under valuation there are about 6 points. The first one is talking about the aging report. Always whether there is trade receivable or a trade payable, the first point which comes to our head is aging report. So that is the first one. Second, if there is any debtor which is under litigation, then how will you value that, whether it has been valued properly? Now debtor nu sonale there will be a provision which is created for debtor, and if there is a doubtful debtor, what will you do? Now whether if there is a provision, whether it has been approved by the appropriate authority, because simply if you make the sale, tomorrow if you put them as provision, again make the sale, tomorrow if you put them as provision, it is not correct. So whatever provision which is being created has to be approved by board of directors or any other approved authority. Then you will be seeing the schedule of movement for the provisions which is created. Now these are the audit procedures for valuation of trade receivables. Now let's quickly see the answer which is given here. Few audit procedures to obtain sufficient appropriate audit evidence to conclude that trade receivables have been valued appropriately is review the process to derive an allowance for doubtful accounts. This will include a consistency comparison with the method used in the last year and a determination of whether method is appropriate for the underlying business environment. Obtain the aging report receivable. I told you both debit and credit balance. Also obtain the list of debtors under litigation and compare it with the previous year. Scrutinize the analysis and identify those debtors which appear doubtful and discuss with management about reasons as to why these debtors are not included in provision for doubtful debt. He should check if provisions are made at appropriate rates and recoverability is due. Prepare the schedule of movements of bad debts, I told you, and if there is any write-off of the receivable balances, that has to be approved by the appropriate authorities. In the case of company, they can be the board of directors. So direct question, they are asking about valuation of trade receivables. These 6 points if you write, you will get the full marks, guys. Question number 16. Messrs. Veer and Associates is appointed as auditor of KMP Limited. During the audit, auditor wants to verify that trade payables. Now they are going to trade payables. Now coming to liability side, and liability balances that were supposed to be recorded have been recognized in the financial statements. Which assertion auditor wants to ensure, and what audit procedure should be followed by him in this regard? What is he saying? Whatever was supposed to be recorded has been recorded appropriately in the financial statement. So what is the assertion? Completeness is the assertion that they are talking here. Auditor wants to ensure completeness, and the auditor, whatever audit procedures that he has to do. This also already we have discussed. Auditor needs to perform the following cutoff procedure. For the last 5 invoices, what he has to do: all the goods received prior to the period end, whether it is booked in the form of purchases and included in the trade creditors. Test purchases or expenses on sample basis for the accounts payable ledger. Match the purchase invoice dates to the gate entry invoice dates. Review subsequent expense voucher. Review all material expense voucher recorded post the balance sheet date to see if they relate to transactions from within the audit period. For advance received from the customers or revenue received in advance, obtain the customer-wise schedule. Also, entities management, if there have been dispute with the customer, if there is additional liability to be recorded. In relation to statutory dues, liability with withholding tax, TDS, GST, luxury tax, professional tax, all of this, if they have to give, then how is the recording done for that? He shall prepare a complete list of all statutory dues and report under CARO 2020 also. Now what are they asking here? They are asking what assertion directly. You need to understand that they are talking about completeness assertion, and what are the audit procedures under the completeness assertion also you will have to write. Going to question number 17. Mr. Vayu is appointed as the auditor of Prism Limited for the year 23-24. He wants to ensure that PPE has been valued appropriately and as per generally accepted accounting policies and practices, and also that Prism Limited has valid legal ownership rights over the PPE claimed to be held by the company and recorded. Explain how the auditor will verify the same. Now there are two things that they are asking here. They are talking about valuation and they are talking about the rights, because they are also talking about legal ownership rights. Now valuation for one question, I think 14th question or something we already saw. Valuation sonnale you will talk about depreciation, whether it is done for all items, and for non-depreciable like freehold land, depreciation should not be coming. And depreciation means it can be SLM, WDV or anything else which basically shows that the future economic benefits of the asset. And the third point was AS 28, impairment of asset. Now rights is a new question which they have asked. Now in rights, what are they asking? Whether the company is the legal owner of the asset which is being maintained. PPE purchase invoice, whether it is in the name of the entity. Any addition to land and building, you will be checking the sale deed, conveyance sale deed, and you will also ask for original title deed. In that you can see who is the title, who is the owner of this building, owner of this plant, owner of this machinery, like that you will be seeing there. And security for borrowing, you can get the confirmation from the lender and also the register of charges. In case if there is an asset, there will be a charge list, so you can see the register of charges also. PPE have been valued appropriately and as per generally accepted accounting policies and practices. It is common understanding that value of fixed assets or PPE depreciates due to effects of time. The same thing, I'm just going to leave that. So the first one, they are talking about depreciation, method used, and AS 28 impairment. In addition to procedures undertaken for verifying completeness of additions to PPE, they are also talking about for all additions to land and building, auditor should check the conveyance deed, sale deed to verify if entity is valid legal owner or not. Auditor should infer original title deeds for all the immovable property. In case the entity has given such immovable property as security for any borrowing, then the auditor will request for respective lenders who are holding the original title deeds as security. In addition, you will also see the register of charges, because charges is very important. You will be feeling that the asset is yours, but actually you would have given as collateral and you would have taken the money. So if you don't repay the money, the asset is no more the company's. It belongs to the person who's given the loan. So you need to check the register of charges as well. Can we go to question number 18? I hope it's not over the head for all of you. Now going to question number 18. CA Karan wants to test the completeness assertion relating to intangible asset. Direct question. Intangible asset they have given. What kind of assertion? Completeness also they have given. What are the audit procedures you will have to say. Now under completeness, you will start off with verifying the movement, because you will start from opening balance, all the additions during the year, deletions during the year, you will come to the closing balance. Then you come to the arithmetical accuracy. You must also talk about all the additions made and all the deletions made. What are you going to talk about that? With regard to the addition, whether the recognition criteria is as per the AS 26. If there is any expenses which is made for research phase of an internal project, that will not come under AS 26. Now, if there is any internal process that is competitive, quotes, tenders, all of those things they will be seeing. This is a point for both addition and deletion. And any addition which has to be made, it has to be approved by the appropriate authority. Now, for deletion, what will you see? Can you just delete any asset? There has to be a reason for deleting and there has to be a rationale for deleting. There should be an approval for the deletion and a disposal note. What is the process for selling that intangible asset and whether it has been accurately recorded with regard to the deletion and also with regard to the general ledger, you will have to see. Now, they are talking about completeness. Verify the movement in the intangible asset schedule, opening balance plus addition minus deletion, that is the closing balance. Check the arithmetical accuracy. For additions during the period under audit, obtain listing of all the additions. What are the additions? For material addition, whether such expenditure meets the criteria as per AS 26. No intangible asset arising from research of an internal project should be recognized. Verify whether additions have been approved by appropriate entities personnel, whether proper internal process and procedure like inviting competitive quotation, proper tender were followed prior to finalizing the vendor. In relation to deletion of intangible asset, understand from management reason and rationale for the deletion. Obtain the management approval and disposal note. Verify the process followed for sale, for example inviting competitive quotes, tenders, basis of calculation. Verify that management has accurately recorded and the resultant gain or loss in the entity's books of accounts also. All the points which I told, you need to understand that if they are asking completeness, you also have to write the addition and deletion here, because most of the times people will think these 2 points are only completeness. No, you also have to write all the audit procedures for addition of intangible asset and the deletion of intangible asset. Now coming to question number 19, guys. Kite Private Limited acquired an immovable property of substantial value during the financial year 2023 to 24, which is recorded in the financial statements as an addition in the schedule of PPE. The auditor also observed that this immovable property has been mortgaged to a bank for availing the credit facilities. How should the auditor verify the rights and obligation assertion to ensure the entity's legal ownership and identify any charges? Now, rights points, 5 points which we already discussed. Again, they are asking those 5 points. The first one, PPE, whether the purchase invoice is as in the name of the entity. If there is any addition to the land and building, you will be checking the conveyance sale deed. About the original sales invoices, you will be about the original title deeds, you will be asking. And security for borrowing, if you have given, you will be asking for confirmation from the lender, and also you will be asking for the register of charges. These 5 points, if you write, you will get the full marks. Already we saw this, so I am not going through the text here. Question number 20. As the statutory auditor of Ginny Limited, you need to verify if the company has valid legal ownership rights over the inventory. Now they are going to rights. I already told you rights is extremely important, because only in 3 or 4 places you can see in PPE, intangible asset and inventory is one. That's all you can see the right. Now in rights of inventory, there are 7 points here. Whether they have valid legal ownership, you will have to check. The first one is vouch the purchase with the documentation. The documentation can be a purchase order, it can be an invoice. Then in that invoice, the name of the entity must be given. That is, invoices must mention the name of the client. If any material purchased commitment agreement has been entered, or if there is any consignment agreement, you will have to see, because in inventory multiple times we have seen consignment, because the consignment inventory must not be mixed with the normal inventory. Then you will be checking whether there is any collateral agreement, existence of any collateral agreement. If it is there, client correspondence, sales and receivable record, and declaration from third party in their letterhead, and which has to be signed and authorized by a third party, you can get that. Now, as a statutory auditor, you will be vouching the recorded purchases to underlying documentation. I told you, PO, invoice, cancel check, payment file, evaluate the consigned goods, examine client correspondence, sale and receivable records, purchase documents, determine existence of collateral agreements, review consignment agreement, review material purchase commitment agreement. I hope you are having the WAV notes next to you. It will be extremely easy to go through the points in the WAV notes and also read these. Examine invoices for evidence of ownership. That means invoices shall be in the name of the client only. Obtain confirmation of significant items of inventory. For instances of inventory which is held by third party, then auditor will be insisting on obtaining a declaration from the third party. Going to the question number 21. Now, items of FS, most of the times, they will ask a direct question, because it is extremely voluminous, correct? When you are studying it, you are getting very irritated. That means when you are answering it, you will be very calm, because once you see the question, you will feel like, yes, I know this answer. Question number 21. During the audit of HST Limited, CA Mukund, the auditor, observed a significant volume of unsold electronic parts as inventory that has remained stagnant for more than 2 years. He noted that the company was facing difficulty selling these items due to changes in the market. Additionally, some parts were damaged and others were discontinued models. CA Mukund also ensured that inventory was accurately valued to ensure proper financial reporting. You are required to outline the detailed audit procedures that are generally undertaken when auditing such inventories, which at the time of observance of physical counting were noted as being damaged or obsolete. Basically, they are asking specifically how will you examine the damaged and obsolete inventory. For the purpose, request the client to provide inventory aging split and follow up for any inventory which at the time of observance were noted to be damaged or obsolete. This is a new question, guys. Please make note. Compare the recorded cost with replacement cost. Examine vendor price list to determine if recorded cost is less than the current prices. Calculate inventory turnover ratio. Obsolete inventory may be revealed if ratio is significantly lower. Yes, if the ratio is too low, that means in the inventory turnover ratio, it is going to show that there is some inventory which is not being sold, which cannot be sold. That means there is a lot of obsolete inventory. In manufacturing environment, test overhead allocation rate and ensure that only direct labor, direct material and overhead have been included. Verify the correct application of lower of cost or net realizable value principles. This is question number 21. Please mark this as new or something. Put a star or something for your reference. Question 22. Messrs. AR and Associates have been appointed as statutory auditor of Future Limited, a company engaged in business of manufacturing of hardware product. They are analyzing monthly trends. Okay, they're doing some trend analysis for other expenses like rent, power and fuel, repair, etc. and also verifying attributes of such types of expenses. Now, this is under other expenses. There were multiple things under that. Specifically for rent, power and fuel repairs, they are asking whether the expenditure pertain to current period, whether expenditure qualified as revenue and not a capital expenditure, it has valid supporting document, whether it has been classified under correct expense head, whether expenditure was authorized as per the authority matrix, whether expenditure was in relation to entity's business and not a personal expenditure, because travel and all is there. You can travel for personal expenses and you will say that I have used it for the company only, so all that must not happen. Direct question again. Question number 23. ABC and company are in the business of manufacturing toys. The stock taking process has been done by the company as on 31st March 2024. The company has used FIFO method for valuation. Oh, they have used? Yes, FIFO method. Good. The cost of inventory as on 31st March 2024 is 25 lakh 25,000 and the net realizable value of the inventory on the same date is 25 lakh 24,000. Now they are saying that the cost of inventory includes the following: material purchase cost 25 lakh 5,000, allocated transport cost 18,000, and they have also included what? Abnormal wastage also they have included. So now the actual cost of the inventory, how they have calculated what 25 lakh 25,000 is wrong. It should ideally be 25 lakh and 23,000 because abnormal wastage will not come. Now actual cost is 25 lakh 23,000 and net realizable value is 25 lakh 24,000. So cost or NRV, whichever is lower, you will have to value your inventory at cost, which is 25 lakh 23,000. Can you see this? The same thing, text is given here. Inventory to be recognized at the lower of cost and NRV in accordance with AS2. Further, any cost that could not be reasonably allocated to cost of production and any abnormal wastage has to be excluded. That's why this 2000 must be excluded. As soon as you see this abnormal wastage, you must know that this is not included in the inventory, guys. Only if you know that, you can write all these stories and then you can come to your conclusion saying 25 lakh 23,000 is a cost and cost or NRV whichever is lower, so that automatically becomes the valuation of the inventory. Going to question number 24. LD Limited has given below loans to the following borrowers during the financial year 23-24. Mr. B, an auditor, wants your guidance regarding additional regulatory information required to be provided under the Companies Act. So, multiple disclosure questions they are asking, guys. Now, borrowers are promoter, director, KMP, related party, others, and total. Maximum loan granted during the year 23-24 they have given. Outstanding loan as on 31st March 24 they have given that. Now this maximum loan granted and outstanding loan, this with this you will be able to tell yes, everything is within the maximum limit, so it is fine. But in the regulatory information, additional regulatory information, you must also give the percentage of the loan to the total. So percentage to the total loan and advances has to be given. How are you going to calculate that? 15 by 120 into 100, 15 by total into 100. Next 25 by 120 into 100, 5 by 120 into 100, 10 by 120 and 65 by 120 into 100. Once you do that, you get the percentage to the total loan. You will have to show the amount of loan and the percentage for the total loan. Now one more thing which is important is percentage for the total loan need not be given for others, because only for promoter, director, KMP and related party you need to give this information. Is that clear, guys? I hope it's clear. Yes, this is a disclosure requirement for borrowings. Going to question number 25. PQ and Co want to diversify its business, and for that purpose they want to raise money by issuing shares to public. Okay, this is share capital they are going. Face value is 100, but the directors propose to issue at discount rate of 95 rupees. Can you issue shares at a discount? No, if you issue shares at a discount, it is going to be considered as void. But there is an exception. For sweat equity shares, you can issue a discount, and for creditors under credit restructuring scheme, which is approved by RBI guidelines, that is an exception which is given. Now, okay, let me finish the question. The face value is 100, but directors of the company proposes to issue the shares at a discounted rate of 95, so as to receive more response. The statutory auditor, however, objects to the same as it is not allowed. Now they themselves have told what is the provisions of section 53 of the Companies Act with reference to shares issued at discount and consequences where the company fails. Now share capital, if you see the above notes, you can see the mind mapping there. We start off with audit procedures, then shares issued at premium, shares issued at discount, set equity shares and reduction. Now basically they are asking shares issued at discount under section 53 of the Companies Act. Company shall not issue shares at a discount except in case of sweat equity shares. Any share issued by the company at a discounted price shall be void. Notwithstanding anything contained, this is the exception which I told you. Company may issue shares at a discount to its creditors when the debt is converted into shares in pursuance of a statutory resolution plan or a debt restructuring scheme, which is as per the Reserve Bank of India RBI guidelines. Where any company fails to comply, then what is the penalty? Every company and officer in default will be liable to a penalty for amount raised or rupees 5 lakhs, whichever is lower, and also whatever money that they have collected due to issue of shares at a discount, that money has to be refunded along with an interest percentage of 12% per annum. That only is given in this point. Where any company fails to comply with provisions of this section, such company and every officer in default shall be liable to penalty which may extend to amount equal to the amount raised through issue of shares or 5 lakh, whichever is lower, and also liable to refund all money with interest at the rate of 12%. Very easy. HR and Associates are the auditors of a large manufacturing company. The company has recently invested huge amount in PPE for its new unit. They have added many incidental expenses to the cost of PPE. The junior audit team members are not sure about which cost should be excluded. There are 4 costs which has to be excluded. Inauguration cost. Second one, cost of introducing a new product or service, new business or new cost of conducting a new business in a new location or a new class of customers, or any administrative or other general overhead. These 4 points. Direct question, easy to score the marks here. Question number 27. Proceedings have been initiated against Falls Limited for holding Binami property under law relating to prohibition of Binami transactions. Now, this is again under additional important disclosures which has to be done. Disclosure in case of Binami property. I told you those 5 disclosures, multiple times they have asked details of such property, including year of acquisition, amount, details of beneficiary. If property is not in books, then that fact has to be given. Where there are proceedings under this company, then the details shall be provided. Nature of proceedings, status, and company's view on the same. Direct question again. Question number 28. Droma Shoes Private Limited was established in the year 22-23 for manufacturing of footwear. As funds were needed to carry on its business activities, included for purchase of different raw materials, incurring of regular expenses like power and fuel, and payment of wages, it had got sanctioned a credit facility amounting to rupees 2 crores, which is repayable on demand from a bank against primary security of its current assets and collateral security of residential house of one of its directors. Duly signed guarantee documents by directors in favor of bank can also form part of bank's loan documentation. Account statement of above facility downloaded from bank's website shows debit balance of 1.85 crores as on 31st March. The operations in above credit facility are satisfactory. Okay. In this regard, identify the nomenclature of such credit facility given by banks. How would above amount of 1.85 crores be reflected and classified in the financial statements as on 31st March? Also state specific disclosure requirements of Schedule 3 in relation to the above. This type of credit facility is to meet what? Working capital requirements, that is cash credit facility or overdraft facility. That is the first point which has to come to your mind, because they are specifically saying it is for the operations. So that means it is for working capital. Now, specific disclosure requirement for short-term borrowing under Schedule 3, you have to give the nature of security, that is primary securities. As loans have been guaranteed by directors, the aggregate amount of such loan has to be disclosed. To be disclosed as additional regulatory information. This is also the CARO points, whether quarterly returns or statements filed with the banks or financial institutions are in agreement with the books of accounts. If not, summary of reconciliation and reasons for material discrepancy. Clause 2 of CARO. If you see, these points are there. Question number 29. Following is extract of notes to accounts of financial statements of STU Private Limited listing some ratios. Okay, again they are coming to the ratios. Discuss whether disclosure given in following manner meets requirement of Schedule 3 of the Companies Act. Ignore other ratios which are not listed in extract given below. They are basically giving the 2 years ratio 2022 and 2023 is given. Current ratio, inventory turnover ratio, trade receivable turnover ratio, net profit ratio. Now already I told you, you will be studying all the balance sheet items and you will be studying all the P&L items, and if you go, they are going to ask from additional information. So you have to be prepared for everything. Now here you are going to compare with the previous year and you are going to see what are the ratios which is more than 25% change. If it is there, you will be giving the reasons, the denominator, numerator, all those stories, explanation, reasons must be given. If the ratio change is more than 25%. Now see the variation. This is the variation given. These three you will have to give the reasons. As calculated above, there is change in inventory turnover ratio, trade receivable turnover ratio, net profit ratio by more than 25% as compared to the preceding year. Therefore, explanation for such changes have to be provided where the changes are more than 25% as compared to preceding year. Question number 30. The finance, how many are there totally? That's it. 32, that's 3 more questions will be done. The financial statements of XYZ Limited reflects long-term borrowings from the banks, financial institutions, leasing and hire purchase companies. Additionally, the company has issued the debentures to its 1,000 members to raise funds in terms of in accordance with the provisions of Companies Act. The money raised by issuing debentures is also reflected in the long-term borrowing. As a statutory auditor, CAX wants to verify that all borrowings on the balance sheet represent valid claims by banks or other third parties. What are they talking about? Valid claims by banks or third party means they are talking about existence assertion. What are the points under existence assertion? 6 points are there. Now it becomes easy. See, most of the times you need to dissect the question. Here they are specifically saying valid claims by banks and third party. That means they are talking about existence. You need to know that. Once you know that they're talking about existence, now you know whether the minutes has been there, whether it has been authorized properly, whether SA 505 external confirmation can be taken, whether everything as per loan agreement, lease and hire purchase contracts, if there is any debenture trust deed, if there is any debt which is being retired, then whether discharge on the assets are also there. And the last point, written representation can be gotten from the company itself. These 7 points must be there. Review board meetings for approval of new lending agreements. During review, ensure that new loan agreements or bond issues were authorized. Check the details of loan recorded. Interest, nature, repayment to the loan agreement. Roll out and obtain independent balance confirmation, that is SA 505 reference. Verify details of lease and hire purchase creditor. In case of debentures, examine the debenture trust deed. When the debt is retired, ensure that discharge is received on the asset securing the debt. Obtain the written representation. Question number 31. CAN engagement partner of LPS and Associates is planning for audit of a large company. As part of preliminary engagement activities being performed in this regard, he wants to ensure that compliance with independence requirements is adhered. How shall he form a conclusion that audit firm complies with independence requirements? Okay, this is not items of FS question. They're just saying how will you be independent. Obtain relevant information to identify and evaluate circumstances and relationship that creates a threat to independence. Evaluate information on identified breaches. Take the appropriate action to eliminate the threat. That is ethics question, guys. Like that only, when you are doing something, suddenly something else will come. You need to be prepared for everything in the exam hall. That is why we have inserted here and there other chapters also. Companies are increasingly using data analytics for managing their operations. Auditors can also obtain good results by using data analytics. What are the tools and techniques used by auditors in applying the data analytics? Now, tools and techniques. What is it? Computer assisted audit technique. CAT you will have to write. Data analytics can be used in testing of electronic records and data residing in IT systems, that is IDEA ACL, to perform the following. You will be checking the completeness of data and population. It can be used for selection of audit samples. Data analytics can be used for recomputation of balances and re-performance of calculation, analysis of any journal entry to see if there is any fraud, evaluating impact on the internal control deficiencies also. Now this is the last question. Kirti, a CA student, has joined articles in a reputed audit firm. She considers audit engagement to be an assurance engagement. Her understanding is that audit engagement is only kind of assurance engagement in which practitioner gives a written assurance report in appropriate form. However, her friend Somaya does not agree with her. She is of the view that assurance engagement are not restricted to audit alone. Besides, Somaya also thinks that assurance engagement can also relate to matters other than historical financial information. Now, this is also not items of FS, but like I told you, you need to be prepared for everything. Audit engagement, yes, no, undoubtedly it is an assurance engagement. However, audit assurance engagements are not restricted to auditing alone. If you remember, there were 3 types of assurance engagement. If you have lots of time, you can do investigation and you can do audit if you have good amount of time where people will be satisfied. I gave example as biryani, and review engagement is also an assurance engagement where for listed entities within 7 days you will have to give the report to the SEBI. So very limited time. If guest is saying I will come immediately, what we will be doing? Upma. If you remember, I gave you all the examples. And other than historical also it is there. Prospective financial information also we can give. Now all of that you will have to write. Assurance engagement provides assurance to user. Differences of degrees. Whereas an audit provides reasonable assurance, which is a high level of assurance, but review is going to provide only lower level of assurance when compared to audit. There are also assurance engagement related to matters other than historical financial information, like providing prospective financial information, providing assurance on internal control. In assurance report involving prospective financial information, the practitioner obtains sufficient appropriate audit evidence to the effect that management's assumptions on which the prospective is based are not unreasonable. Prospective financial information is properly prepared on the basis of assumption and is properly presented, and all material assumptions are adequately disclosed. In this given case, Kriti is of the view that audit engagement is the only kind of assurance engagement, so it is not correct. Only the view of her friend Somaya is correct. With this, all the questions of items of financial statements, hardly 1 hour and a few minutes, 1 hour 7 minutes extra. Now, let me talk a little bit about items of FS, what you have to study. Now, this workbook is definitely useful because you are doing 8 model test papers and RTPs and previous exam papers, which is exam standard. If you see, all the questions here is ICA standard only. Apart from this, I please request you to go through the WOW notes. WOW notes are basically all of this which is concised and given to you. I hope you have already seen that. I'm sure people who are watching the classes, you know what is verb notes, where to get these verb notes. Separately for items of FS, I have uploaded the verb notes in the free resources tab. For people who are watching on YouTube, you guys also can definitely see the verb notes. It will be extremely helpful for you. Items of FS, separately I have given the verb notes so that you guys can use it in 9 pages. Items of FS, handwritten notes. It will be extremely helpful. So use this, guys. And all the very best for your exams.